It's Brian Preston, the Money Guy.
This next question is from Lori. Lori says, I have a modest rollover IRA that I'd like to convert to Roth funds. I'm in my early 40s and figure it would be worth it if I have 20 or more years for it to grow. What's the best way to do that? Well, one, most custodians make Roth conversions pretty easily. They actually have an option when you do a distribution from your IRA rollover to your Roth. It'll say, hey, is you doing a Roth conversion? Great. Do you want to withhold any taxes? Our thought is no, you don't want to withhold the taxes. You want to pay with outside money to be able to do that. But this is the question that I think you really have to answer, Lori, as to whether this makes sense. When you do a Roth conversion, you're going to pay income tax on that. So if you are in a lower tax bracket and you can pay taxes in one of the lower brackets right now, and that money can grow for the next 20, 30, 40, perhaps it does make sense for you. But only if, when you get to retirement, when you get later on, your tax rate is higher. If your tax rate is the same, odds are it's going to be a wash. It will neither have been more advantageous or less advantageous to do the conversion. Conversions make sense where there's an arbitrage opportunity. Now, there are other estate planning thoughts that you can have as it relates to Roth, but that's really the thing you have to figure out is where I am now going to be higher or lower from an income tax bracket perspective than where I think I'll be when I actually go to pull these dollars out.
Yeah, I think it actually, now the key hurdle is you have to have outside assets. I don't want you using corpus to pay the taxes because that blows up the whole thought process. I think it's a pretty easy decision if you're in that low 12% tax bracket to consider that, because even if you add your state income taxes to 12%, that's probably a still historically low tax rate to consider. But when you get into higher tax brackets, meaning like you get into, I want to say like the 24, and then you add the state income tax on top of it, your marginal rates are now getting well into the 30% range. And the thought is when you retire, yes, you'll be in a lower tax bracket. And a lot of states don't even charge you state income tax on your retirement distributions if you're in one of those favored tax states. Right. You've got to take all that into account. So it's definitely one of those things. Make sure you have enough outside assets. Make sure you're in those lower income tax brackets to where it is justifiable to do the Roth conversion now. If you check those boxes, have at it. I think it's a great thing.
I think that was your question. If your question was actually about logistics, most of them will allow you to do it online. But if you're ever nervous, call. If you're at a Vanguard or Fidelity or Schwab or fill in the blank, call the provider, the custodian that houses your assets, and ask them for the process. It'll either be an electronic thing online or some paperwork you have to fill out, but you don't want to screw it up. And make sure that when you do this, you notify your tax preparer, or if you self-prepare, you understand the right ways to do that on your tax return and reflect it so that it's taxed in the appropriate manner.